Hey everybody, Person Bryn here with our weekly roundup for the trading week ending November 20th, 2015. What I've got on the screen here is the E-mini S&P 500 futures daily chart. Um, it This week was a really good week, very strong week. In fact, you can see here where the week started towards the bottom and now we finished up towards the top. So it's one of the stronger weeks that we've had. If I were to put it out on a weekly chart, you could see here just how strong this week was. And we'll just kind of move it out, and I'll move it up to scale here. We did not quite take out the prior high of last week. You could see there was a high and then another pivot high and then like this right here, and then a low, another low, and a low there. So we've got that trend line going like this, but I suspect we're going to take it out this week. So that to me is going to be a key move right there, taking out that pivot high of the prior high of last week. And then we're going to take out this roughly 2110 area, which was the previous pivot high 2 weeks ago before we started this down move here. But it's been a very shallow down move, more of a profit taking mode. Again, if you look at the Elliott wave count, we got a 1, a 2, a 3 like this, and this is I'm not really convinced yet that that's a 4-leg down. That would suggest that the 3-leg can come a little bit higher before we have a more sustainable pullback. Now, if I come back to a daily chart, and let's just kind of zoom in a little bit more and get a little bit better clarity on this thing. If I look at this on a day chart, you can see here where we do have a 3-leg that has come down, from a profit taking mode. And this was from this run up that we had coming all the way back here, down around the 1862 area, that was made back in the end of September. And then, as you know, October's just been a very strong month for us. In fact, one of the strongest we've seen in quite some time, over 8.5% on the S&P 500. And the other thing is Q4 is typically a strong quarter anyway for the U.S. markets. In fact, October, November, December, if you go back 70 years, we have a 60% chance of finishing higher at the end of the year than where we started. And October, when we have a very strong October, we still finish up November, December. Now, in November, the first part of the month tends to be weak, and then as we go into the holiday week here in the United States through the end of the year, it is also a very strong time frame, 6 or 7 week time period here, where the markets tend to finish up about 2.5% in late November into December. So if we look at the chart here, this is kind of laying out the way historical price patterns have shown. We've got a 3-leg, 4-leg down, and then I'm looking at a 5-leg somewhere up in this area here, which would indicate we would take out the all-time highs of the E-minis. Now, that means we got to clear this pivot high right here. And looking at where we are right now, we're clearly in this mode. And this week we had a little bit of a pause on Tuesday, right there, and then you can see a little bit of a pause on Thursday, but Friday, we just moved up, and Wednesday we had a good day as well. So that's kind of where we're sitting right now. If I were to calculate and then just put in where I'm thinking resistance is going to fall here, you can see it's coming in almost right on top of our all-time highs. I personally do not believe we're going to hit the all-time highs until we get a December 16th Fed meeting on whether they're going to raise rates or not. Now, surprisingly, every time they've come out, and over the past 2 weeks, the Feds are stepping all over themselves here in the U.S., saying that, we could expect a rate hike before the end of the year. And the markets tend to react favorably to it. But surprisingly, so do the bonds. The bonds are moving up. But I attribute a lot of that. We've got a yield curve where the close-in rates, under 10 years, 5 years, are moving up the interest rates are moving up, while the further dated out on the yield curve, the 30-year bonds are moving down. And that would suggest that, yes, the front end rates, the treasury notes, treasury bills are expecting an interest rate increase, but the bonds, because there is absolutely no inflation further out on the curve, they've moved up a little bit. So that's kind of what's going on in the U.S. Treasury market right now. But I do believe that we're going to continue this upward momentum for the near term, short of anything crazy coming out of economic data or anything globally. And then I think, if depending on how the Feds react, we could have a very interesting early part of the year in December, going into the 16th interest rate announcement. The other thing that's happening too is Mario Draghi came out a couple of weeks ago and talked about the euro. In the Europe being, they need more stimulus, and they're going to be meeting the beginning of December as well. So there've been, for our members, there have been great trades that we've made and are still making in the currency market, in the bond market, and in the equity market. And as you can see here, this is where we're sitting. Now, as always, I like to go into a 2-hour chart to get a really tighter view of the daily chart. And you can see here on this tight view, we are now setting up for a little bit of a pullback. I think early next week we're going to see it. You can see a pivot high there, a pivot high there. So there was no bearish divergence in this move here. So any pullback there was going to be expected to be very light, as we called it, as I called it. And now you can see another pivot high here, but we're setting up now for a little bit of a bearish divergence. This is on a 2-hour chart. So each line here represents 1 day in time. So this divergence here possibly means that early in the week, next week, we'll get a little bit of softness in the price to wash away this divergence. We'll probably settle up. I don't think we're going to go. We've got a couple of strong support points, one around 2070, and we have another one here. You can see this zone right here. If I were to draw it up to about 2075, we got another minor pivot, which would be this pivot high right here, which takes us down to about 2062. So we got a lot of support beneath us, and because this is a weak bearish divergence kind of signal, I do believe we'll get a little bit of pullback, probably give us a 4-leg, and then we'll get that final thrust up, possibly taking this out before we have a kind of a choppy mode, and then we see which way we're going to go. Now, this can happen. This will happen before December the 16th. So right now it looks like next week we'll start off a little bit soft, and then we'll see. Now, keep in mind that, these divergences say expect softness, but they don't say how far down you're going to go. They typically also don't say when that occurrence, that softness and that downward move is going to start. So typically I'm looking for triggers in the chart action for our members. We'll go through this in more detail Sunday night for our weekly market watch. Sunday night. So in our weekly roundup here, this is where I'm looking for the E-minis. Now, the other thing that we've done, and we've had some very profitable trades in the bond market, currency market, energy market, and some equities that we see here that are moving very nicely. The other thing is, if I come back to the daily chart here, I'm going to show you again, and I'm going to put all my indicators on here. Hopefully it won't confuse you too much. But you can see here another thing that happened, and I'll stretch it out just a little bit so you could probably see it better on your computer at home. But you can see here where the 50 EMA right here, that would be this red line, just crossed back above the yellow line, which is the 200 EMA. So that is a good thing. We're back in business here. We also got a cross above the 0 line on the MACD. We're back in the histogram is positive again. So that does suggest that even though we may experience some softness near term, the market is still clearly in an up mode, and it probably wants to go higher. Okay. So that's kind of where we're sitting on the S&P 500. Now, if we look at the lead dog, which would be NASDAQ, okay, you'll see NASDAQ right here is very close to taking out 2015 highs made at 47.29.75. We've got this 3-leg. We didn't really pull back far enough to get a 4-leg, and a very bullish cross on the MACD, even higher elevated than the S&P, tells me that, you know, we could take this out very quickly next week. The highs for 2015. You can see the opening price for 2015 for the NASDAQ at 42.40.25. So we got a lot of elevation above that. So this one is still looking strong. So I'm all in favor of anything in the, you know, like the Qs would be a good play. I think see if you see how the markets open Monday, but I think the Qs are going to be a good play. Now, if we look at the follower in the pack, the dog bringing up the rear, that would be the Russell. You can see with the Russell here, the red line is below the yellow line, the 50 is below the 200 EMA. Look at the price action. We're below the opening price for the year, so we're still in the red on the Russell. And you know, we're getting a little bit of a cross to the upside, but we're below the zero line here on the MACD. So we're still got a lot of weakness in the Russell. I want to see some more strength come in. What this tells me is that we're still susceptible, guys, to a downward move because the RUD is small and mid cap. We're just not seeing the follow through that I would like. So even though I believe near term, you know, defined out through December, early January, we could see an impulse move higher. I think in 2016, going into February, March, we're going to be lower than where we are right now. So that's kind of the way the charts are looking to me at this time. If we go back to the S&P 500 futures, again, let me just, I'm going to find this here. I want to show you here, you can see, and I'm just going to blow it up so you can see here. We're above the opening price of the year at 2055. So in the middle of the week, we went back into the green on the S&P 500. So we're in the green for 2015 on the S&P 500. We're in the green on the NASDAQ. And then if we come over here and look at the other major index, the Dow, you can see we just barely finished in the green at 17,801. That's kind of, or where we closed today, we closed at 17,801. So just above 17,800. The opening price of the Dow for the year was 17,781 on the futures. So now, and we got a strong signal here as well, which would suggest we're going to get follow through in the Dow futures as well. You can see we didn't get a 4-leg print. We got a cross in the MACD above the zero line, like the NASDAQ, like the E-minis, unlike the Russell. So I believe we're going to come back up into this little zone up here around 18,000. All right. So we're going to take out this prior pivot high, which we almost did today on an intra-daily basis. But I believe we're going to take that out next week, and then we're going to compress on. We've got to get some follow through in the Russell here. So if the Russell catches up, it could be an interesting trade in IWM. It could see stronger lift next week than the other markets. But again, I think early in the week, we might see a little bit of softness, and then it's going to strengthen up. That's the way the chart action is looking right now. We also had, if we look at volatility, you can see the VIX today really is starting to come back down on this 2-hour chart here. You can see going back to the 13th of November, the VIX has slowly been working down, all right? And so volatility has been slowly coming out of the market. The VIX back on the 13th, about a week ago, was up over 20. And you can see now we're now continuing to move down. The term structure of the volatility futures is in contango. So that means the fear has kind of come out of the market. But I think volatility is going to stay relatively higher than normal through the end of the year. The market's a little bit jumpy. We got a lot of the terrorist things going on globally. Not to mention we have potential interest rate hike, and we've got potential action out of Draghi as far as putting more stimulus out there and further weakening the euro, strengthening the dollar. So these are just some things that I see really starting to light up on my screen here. But I think there's going to be some great opportunities as we go through the end of this year into next year. So that's kind of where we're sitting right now. And then in the currency market, as I said, the euro is continuing to come down to my target. I said the target here. Let me just come back to a daily just to show you guys a little bit better. You can see that wider zone that the euro has been in. I do believe right here, and I just move it out a little bit. Again, this is a daily chart. I'm projecting that the euro is going to come down. If the euro takes out this prior pivot low here, right around 104 that was made on the March the 12th, I think it's going to take it out. I think it's going to run a little bit lower. It's going to have double action because you're going to have Mario Draghi adding more stimulus in Europe while we're raising interest rates here in the U.S. So you're going to see money continue to come into the U.S., especially the U.S. dollar, and maybe the long end of the yield curve with bonds. They'll stay a little bit higher than people think. The short end, you know, under 10 years, you'll see those interest rates start to move back up a little bit. So that's kind of where we're sitting there. There are other currencies that we're playing. I think the other thing of note here is the gold market. You can see gold is moving down. Now, I had projected gold coming down all the way down to almost 1,000. Notice we've got a 3, 4, 5 pattern in this Elliott wave pattern here. There is no bearish divergence on a 5 leg. I'd like to see a divergence in the indicators. I do not see it, so that tells me that the odds favor more downside in gold. Folks, I don't know if gold is going to take off in 2016 or 2017, but when inflation starts to take hold, gold is going to be a really great play. Now, we played gold when it was over a few years ago, up over 1900, and we rode that thing down. I think the tide's going to turn here eventually, and it's going to go back up. And speaking of going back down as a commodity, I'm looking at oil here. I think oil, believe it or not, near term can go a little bit lower. We're getting ready to get into the seasonality of oil in December, January time frame. So I am taking some trades in oil or gasoline futures and some in oil as well to the upside, but these are counter trend moves until we get a signal to the long side. There are other trades we're doing in the ag market and of course in the equity market. If you're not a member, I highly encourage you to come on in and sign up. We got an international audience. We trade all commodities, currencies, equities, and U.S. indexes. And it's just, I think 2016 is going to be as much fun, probably even more so than 2015. And even though right now we're almost right back where we started at the beginning of the year for the S&P 500, there's been a lot of fun trades along the way. So I think that's not going to change in 2016. All right, everybody, I want you to enjoy your weekend. For our members, I will see you this Sunday night for our weekly market watch. So for this weekly roundup, have a great weekend, everybody. Again, check us out. If you're not a member, I'd highly encourage you to come on in. We're going to have another great year. Ciao, everybody.